Let's get in the trenches. I feel like we're declaring war against stocks or something, Scott. But we're going to get to some good stock picks. We're going to go to commodities. Now, I want to start with BP. It's been 1 year since the ill-fated Gulf of Mexico disaster. You know, it's up about 3% today. You recommended buying it on CNBC, saying it was a good buying opportunity when it was just getting tanked right there. What do you do with the stock now? Down about 26% for the whole year.
Well, BP is a good lesson. It's an unfortunate one because of what happened with the environment, but it shows you how if you embrace volatility and you look closely to what's going on, that you could always profit from it. And BP got crushed. It was getting hit. It was, you know, psychologically the whole world was against it, the whole sector. And then we saw a pattern develop where you had a descending channel all the way to the downside into capitulation volume, and that was the trade. I just want to show you that real quickly here. That was right down in this area. Once you had the huge slide, you had capitulation area, descending channel. This was the trade. This was the snapback. This was that professional oversold bounce to take advantage of this over emotion. And now the trade has changed. Now it's you know, it's been basing. It's looking okay. They're coming out of it. I do think BP can be held. It's not you know, a sexy story. Technically, it's in a little bit of a channel. You can get some higher prices, but I like to see it clear. Some of this overhead resistance around 47, 48. I'm not in BP for now, but I do think guys that are holding it, you could stay with this trade. It could reward you later this year.
Because for the long-term investor, I just think it's really risky on some level because it just can't beat back its negativity, right? It was going to pair with a Russian oil company to drill in the Arctic, and that got blocked. And that was sort of how they were going to reinvent themselves as a company. So with oil prices so high and sort of trending up for 2 days in a row now, wouldn't you want to go to the other oil stocks, maybe the OIH instead, for a long-term investor?
Well, that's also good. If you want to not be in the problem spot, you look for spots that were, you know, punished because of another company's type of scenario, and a lot of them were. So if you wanted to go with other ones in the sector, that's fine. And if you didn't know them, OIHs were really good. We talked OIHs. They were really strong about a month ago, and then in the past 2 weeks they were weak. So we talked about buying the dip in the OIHs, buying correctly. And if you look at the OIHs finally found some footing. You remember we talked about buying it here. This was that upper range that broke to the downside. Now I'm seeing a nice pivot low here where I think I'm long tier 1. I might add with it because at some point this is going to make new highs. This was your entry.
So you are going to add, you haven't missed it if you didn't get in?
No, you didn't miss it.
Okay.
I would have rather you bought it last week, but you didn't miss it.
Also, let's hit the fertilizers. Same kind of story here. Now we have potash and CF up huge for the week, up 3%, up almost 2% for the day already. Can you get into these guys?
Well, we talked about these yesterday. Yesterday, they pulled in. They were a very controlled pull-in, and they're not really fast and sexy like some of the other ones we've been trading, but POT looks good. I think it's in the game for higher prices also. I showed you this descending channel yesterday. Look at this nice move. I do think there's some room. You know, first spot on resistance is probably going to be back up here. So as a trade, I'm going to play it long. I'm long right now, probably to 60, and then after a bit of time, it could break out to the downside. CF, Mosaic, Monsanto, they're also acting well. They're not leading the market right now, but they're okay and they're acting pretty decent.
And then real quick, on a fundamental level, it just seems like farmers who have extra cash might be more apt to buy equipment like a Deere down 1% while these guys have rallied. Is that just a better maybe long-term play?
Again, buying right, Deere, Caterpillar. Last week we talked about Caterpillar. Everyone wanted to chase the excitement 3 weeks ago when it was at new highs. We said sell the excitement, buy the dip. And now Caterpillar and Deere look decent. Caterpillar, after the first time we bought it here, sold some into strength, nice pullback, retest. It can go higher. I still think you could buy Caterpillar in this spot, and I do think Deere is decent also. I think you're better off going with Caterpillar. You don't need both, but you know, pick one or the other. I think they're going to be fine.
All right, let's round out commodities here with Freeport up about 2.5% already reporting earnings. Suspending mining operations in Indonesia, bad for the company, a little bit of a headwind, but ironically good for copper prices because now there could be a supply shortage. What do you want to do with this stock?
Well, when are they reporting, today or tomorrow?
I heard today, but
today.
Sometimes briefings.
I know people were talking about it yesterday, and they were trying to get in on this pivot area. I don't like to take it into earnings, but you recall we had it here. Nice move. We isolated this ascending channel. We broke to the downside. So down here, you want to buy the dip in Freeport? I think we're going to make another move. I do think the economy is going to keep getting better over time. Copper's probably going to go up because you need copper to rebuild. So Freeport is a good investment to go with. You know, you could buy some around here.
And two quick, super quick headwinds because, you know, Freeport is more of a copper play than a gold play. There has been concerns that there is supply excess in China, that maybe they're not going to use as much as they bought, and also they depend on China for a lot of its demand, but also then there's a rate rise issue. The more monetary policy is tightened, the less they'll actually buy. So I would key into that also in their earnings report.
Yeah, so listen to that on the conference. Maybe give you some clues on those headwinds.